Welcome to our deep dive on Designer Brands, Inc.
Designer brands.
You've sent us a whole stack of articles and reports.
Yeah.
So you obviously want to
A lot
know
of information.
everything about this company, right?
Okay, yeah.
Okay, cool.
We're here to help.
They're not just any shoe store.
You do just that, right? Like,
Okay.
figure out what's really going on here.
They've got this kind of dual strategy,
Okay.
this balance between retail and brand building.
So they want to be the store A&D, the brand.
Yes, that's precisely...
That's kind of crazy, right?
It is ambitious. You're absolutely right.
They're like, that gotta have its own set of challenges, I would think.
Oh, absolutely. It's a very delicate balance.
Okay.
But I think before we jump into all of that,
Sure.
we really need to understand how Designer Brands evolved.
Okay.
It used to be DSW Inc.
Oh, right.
They've come a long way since their start as just a family business back in 1991.
Okay, so rewind the clock.
Yeah. Give me the Designer Brands story, like the origin story.
Okay, so it all started with just one single beginning.
Discount shoe store in Ohio.
Single store, wow.
Over time,
Wow.
they expanded with those familiar DSW stores, right?
Yeah, Designer Shoe Warehouse.
Designer Shoe Warehouse, exactly.
I know those.
And they have now almost 500 of those across the U.S.
500 stores, that's...
Then they went into Canada
Yeah.
with the Shoe Company,
Okay.
which added almost 150 more locations.
So they were already this massive
Huge
retail, I don't know,
powerhouse, exactly.
powerhouse, yeah.
Before they even thought about
Yeah.
creating their own brands.
Okay.
But in 2018, they acquired the Camuto Group.
Okay.
And Camuto Group, that's a big deal.
So that's where the brand building
That's it.
comes in. Okay.
They designed and produced shoes for a lot of brands,
Wow.
including Vince Camuto, which is their own.
Their own line. Okay.
And they handle licensing for brands like Jessica Simpson, Lucky Brand. So that's where they got that, like the vertical integration.
Exactly. That's it.
Right.
So they went from just being a retailer
They control it all now.
to designing, producing, and then selling it right in their own stores.
That makes sense.
That gives them much more control.
A lot more control.
And the potential for way higher profit.
Oh, the margins are better. Okay.
Precisely.
Okay, I can see how that's like
As you can see.
a huge advantage, but at the same time, wouldn't it just be easier to stick to just being a retailer?
You would think.
Right.
You would think, but
Like, why do both?
that's the question. And that's what makes designer brands so fascinating to analyze.
It's a gamble.
It is. It's a gamble,
Okay.
but it's a calculated risk.
So they have the vision, they have the stores, but like, how are they actually doing financially?
All right, so let's get to the numbers.
Let's talk numbers.
Their recent financial results have been, well, a bit of a roller coaster.
Okay.
In fiscal year 2023, they saw a 7.3% dip in their net sales,
7.3%.
which landed them at about $3.1 billion.
Okay, so down a little bit,
Down a little bit,
but not
but their profitability
too bad.
took a major hit.
Okay.
Net income plunged by a whopping 82%, down to just $29.1 million.
Oh, wow. So profits
Profits tanked.
tanked. What happened?
Yeah, so the sources you provided
Okay.
point to a few external factors impacting the entire footwear industry.
Okay, so it's not just them.
Not just them.
So it's the whole market's having problems.
The whole market is kind of struggling a bit.
All right, so what are these broader trends?
Well, first, the overall footwear market has been softening.
Okay.
People just aren't buying as many shoes.
Yeah, people are
And that affects everybody.
watching their wallets, right?
Yeah, and the economy is
Yeah.
not exactly booming.
Right.
People are being much more cautious about what they spend their money on.
Yeah.
And there are some shifts in consumer preferences, too.
Oh, okay.
Remember the sneaker boom?
I do.
Wow.
Things change.
That seems to be cooling off a bit.
So less sneakers.
Less sneakers, yeah.
Okay.
People are starting to dress up more.
Going back to offices and
Yeah.
events and stuff.
So the demand for dressier shoes is starting to pick back up.
Okay.
So fashion's playing a role, too.
Yeah. So it's not just the
Yeah.
economy. It's like
What people want to wear.
what's in style. You know.
Exactly.
Okay.
And speaking of unpredictable,
Oh.
they were also hit by some unusually warm weather last year.
Oh, the weather. Okay.
Yeah, that hurt their boot sales,
You need
which
there
is
was
normally a big part of their business.
cold weather to sell those.
Exactly.
Okay.
So they've got warm winter equals less boot sales.
Less sales.
Yeah.
Okay, so softening market.
Yeah.
Weird weather.
Consumer tastes shifting.
It's no wonder sales took a hit, but was it always this way?
No, not at all.
Okay.
A year before, fiscal year 2022, they were actually doing quite well.
Really?
Yeah, they had $3.3 billion in net sales.
Wow, that's a good number.
Yeah, comparable store sales were up about 6%.
It's outgrowing.
Growing, yeah. Gross profit was $1.1 billion,
Okay.
which gave them a margin of 32.6%.
Healthy margins.
Very healthy, yeah.
Okay, so from like healthy growth
Big swing.
to significant decline in just a year.
Just 1 year, yeah.
What does that tell us about their business model?
Well, it highlights the challenge.
Is this dual business model just not working?
It's tough.
Okay.
You know, being both a successful retailer and a brand builder,
Yeah.
those two sides don't always
They don't always go together.
move together at the same pace.
Yeah.
So
It's like they're competing on two different
they are competing on two different
fronts. Yeah. Okay.
And investors are watching to see how they're going to handle it.
Speaking of investors, how's the stock been doing?
Ah, the stock. Yeah, that's another roller coaster.
Yeah.
Their stock, DBI, on the New York Stock Exchange,
Right.
hit an all-time high back in 2013.
Back in the good old days?
When it was still DSW, yeah.
Okay.
But since then,
Been a decline.
it's been declining like a lot of other brick-and-mortar retailers.
There's whole industries
Yeah, struggling.
been struggling.
Yeah. In the past 5 years, DBI shares have lost a whopping 66% of their value.
66%. That's a
Yeah.
lot.
Yeah, it's a lot. They're trading around 4.78 per share right now.
Ouch. So what's driving this? Like, is this the broader
It's a combination of things.
retail slump, or is there something specific about designer brands?
It's the broader retail slump, yeah.
Okay.
But it's also the market's short-term
Right.
reaction to their long-term vision.
So they have this vision, but Wall Street just wants results now.
No, exactly.
Okay.
They're making moves to expand their own brands,
Okay.
get those higher margins.
Right.
But investors aren't.
Impatient.
They're impatient. They want it now.
Okay.
They're not seeing
Short-term thinking.
the long-term potential.
Okay.
It takes time to build a brand.
Yeah. That's a long game.
It is. It's a long game.
Okay.
But on top of all of that,
Right.
Designer Brands has been busy.
Oh?
They've been making a lot of moves lately.
Okay, like what kind of moves?
Well, for starters,
Okay.
they've acquired Keds and Topo Athletic.
Those are brands.
Brands, yeah.
I know Keds. What's Topo Athletic?
So Keds is classic American sneakers.
Yeah.
Right?
Yeah, I had those when I was a kid.
Long history.
Yeah.
Topo Athletic is a bit more niche.
Oh,
They're known for ergonomic running shoes.
so they're kind of branching out into different parts of the market?
Exactly. They're diversifying, yeah.
Okay. Okay, so that's acquisition.
Acquisitions, but they've also been busy securing new licensing partnerships.
Like what?
Like Hush Puppies.
Hush Puppies, comfy shoe.
Comfy shoes, yeah.
Yeah.
And Le Tigre,
Oh, okay. I've heard of them.
yeah. Trendy fashion sneakers.
So a mix of like
Established names.
established and new and emerging.
Yeah, covering a lot of ground.
That makes sense. Okay, so acquisitions, new partnerships. Anything else going on over there?
Well, they brought in a new CEO,
A new CEO,
Doug Howe.
Doug Howe. Go.
Came in April 2023.
Okay.
He took over from Roger Rollins,
So kind of a new
who'd been there for 7 years.
era.
Fresh perspective.
Okay, so what's his background?
His background is in retail.
Okay.
He was at Kohl's QVC,
Uh-huh.
leading teams in merchandising, marketing, brand development.
Not a shoe guy specifically.
Not a shoe guy, but a retail guy.
Okay.
So he's got a lot of experience.
Yeah.
And he seems to be very aligned with the company's current strategy, which
Okay.
is focusing on those own brands and improving the customer experience.
Yeah.
He's really big on data and technology.
Data and technology.
He sees it as key
Yeah.
to personalize marketing, streamline operations, and make the business run more smoothly.
And he's probably looking at that 28 million member loyalty program like a gold mine.
Exactly. He sees the value in that data.
Yeah.
Yeah.
Okay.
And he's already started to cut costs
Okay.
to free up resources.
To invest more in tech, right?
Yeah, likely to invest more in tech.
Okay.
So
yeah.
he's all about efficiency, yeah.
So efficiency, but also knowing your customer.
Absolutely.
Okay.
And he's not doing it alone. Their CFO, Jared Poff,
Okay.
he's been with the company for a while.
Mm.
He's playing a key role in the financial strategy.
Good team at the top. That's great.
Solid leadership, yeah,
Yeah.
for sure.
But what about the rest of the team? Like, is there anyone there who really embodies this designer brand's way of doing things?
Oh, definitely.
Okay, who?
Debbie Furry.
Okay.
She's the vice chair and chief merchandising officer.
Important title.
She's been with DSW since the 90s.
Wow, since the beginning.
Yeah, she knows her shoes.
Okay, what's her specialty? What does she do best?
She's like a trend oracle.
Okay.
She knows what customers want. She builds those relationships with the vendors.
So she makes sure they have the right shoes at the right time.
Right shoes at the right time, exactly.
Okay, so we've got the CEO with the vision, the CFO keeping the money straight, and the merchandising guru. That's a pretty good team, right?
Yeah, that's a good team. But remember how we were talking about DSW's start as a family business?
Oh, right, right.
Well, that still plays a big role in the company's governance.
Even though they're publicly traded now.
Yeah, the founding family, the Schottensteins,
Okay.
still have a lot of influence.
Okay.
Jay Schottenstein,
Yep.
the one whose family started it all.
Okay.
He's the executive chairman.
Okay, so it's still, like, family controlled in a way.
In a way, yes. And it's because of something called a dual-class share structure.
A dual-class share structure.
Yeah, imagine it like...
I don't know what that is.
Okay, imagine some shares are like VIP tickets.
Okay.
They give the holder more voting power than regular share.
Oh, so they get more say in how the company's run.
Exactly. So the Schottenstein family, they have more say, even though they might not own the majority of the stock.
So it's more power than
More power. Yeah.
a regular shareholder would have.
It gives them a lot of power to make those big decisions.
Okay, so that's something for investors to be aware of, I guess, right?
Definitely. It's something to be aware of.
Because it's good and bad.
Yeah,
right?
it's both.
Like, it's good because it's stable
Stability, yeah.
and long-term perspective.
Long-term perspective.
But also, there's less transparency.
Yeah, it can raise concerns about transparency,
Okay.
but they do have a board of directors
Okay.
with a majority of independent members.
So it's not just the family making all the decisions.
Not just the family, no.
Okay.
And their ESG, environmental, social governance commitments are pretty strong.
Okay, that's good to hear.
They got a perfect score
Yep.
on the Human Rights Campaign's Corporate Equality Index.
Okay.
So they're dedicated to LGBTQ plus inclusivity.
So they're doing the right things
They are.
on that front.
They're also active in community initiatives.
Oh.
They have a program called DSW Gives,
Okay.
and they've invested in a Black-owned footwear factory.
Really?
Yeah, JEMS by Pensole,
Okay.
to promote diversity
Oh, that's cool.
in the industry.
Okay, so that's a good...
They're pretty transparent about their governance as well.
Okay.
They've got a code of conduct for the company and their vendors.
Okay.
So they're open about how they operate.
Well, that's good. Yeah.
Yeah.
So it seems like that family influence is still there, but it's not necessarily a bad thing.
It's not a bad thing.
Okay.
It's part of what makes them unique.
So they're unique in their structure.
Yeah.
They're unique in their business model.
Yeah.
This is already so interesting.
It is fascinating.
I can't wait to hear more.
Yeah, there's so much more to explore.
Yeah.
We'll get into that next time.
Okay, awesome. So, all right, so we've laid the groundwork here.
We've laid the groundwork.
We've talked about their history,
Yeah.
their financial performance,
The challenges they're facing.
challenges they're facing, the structure of the business.
Yeah.
Um,
This is all the key players.
yeah, a lot of information.
Yeah.
We'll be back in just a moment to continue our exploration of Designer Brands, Inc. Stay with us. All right, we're back and ready to dig deeper into Designer Brands, Inc.
Deeper, yeah.
We've talked about their, history,
Their
the
background.
good times, the bad times,
Yes.
the ups
Yeah.
and downs.
The dual business model.
But now let's look at
Absolutely.
like how they actually make this whole thing work.
Let's look at how it all operates, yeah.
So you sent some great articles about their
Yeah, there's a lot of information out there
retail strategy
about how they...
and their brand portfolio. So let's get into that.
Absolutely. Let's start with retail.
Okay, retail.
Okay, so we know they've got the physical stores like
DSW,
DSW,
Shoe Company,
Shoe Company,
Right.
yeah,
and then their own brands that they're building.
and then their own brands, yeah.
So how does that work? Like, are they
That's a great question.
trying to create little mini Vince Camuto boutiques
Okay, so
within a DSW?
it's more integrated.
Or is it all like mixed together?
Yeah, it's all mixed in.
Okay.
They want their stores to be a one-stop shop
So it's still that
for all kinds of brands.
treasure hunt experience that
Yeah.
DSW is known for.
They want you to come in and...
But now with their own brands mixed in.
Exactly. They want you to feel that sense of discovery, that excitement.
Okay, that makes sense.
You never know what you're going to find,
Yeah.
whether it's designer heels or a pair of Keds.
Speaking of kids, I read that they've been
I think I saw that too.
trying some new things
Oh, yeah.
in their stores, right?
Yeah. They're adding things like
They're adding like
nail salon,
nail salons.
shoe repair. It's about creating a more
Interesting.
holistic and engaging experience for the customer.
So they want people to come in and just kind of hang out, not just buy shoes.
Yeah, they want to make DSW more than just a place to buy shoes.
Okay.
Make it a destination where
Okay.
people want to spend their time.
Mini department store.
Kind of, yeah.
For shoes.
It plays into a bigger trend that
Yeah.
we're seeing in retail, where stores are becoming less about transactions and more about experiences.
Makes sense. You can buy shoes anywhere,
Exactly.
online especially.
Yeah, but if you can go to a store,
If you go to the store,
get that personalized service,
yeah, try things on.
maybe grab a latte,
Yeah.
it makes it much more appealing.
Okay.
And then they've got that loyalty program,
Yeah, we talked about that. The 28 million.
25 to 28 million members.
Yeah.
That's huge.
It's a huge base of loyal customers
Loyal customers, yeah.
who are probably going to keep coming back, right?
Especially if they're getting rewarded for it.
Yeah. Points and discounts and stuff.
Exactly.
That's smart.
So that helps them.
That's how you fight Amazon.
Compete with Amazon, yeah. Because even if you can find similar shoes online,
If you're in the loyalty program,
you're getting those perks.
yeah, you might as well buy from DSW.
Yeah.
Okay, so they're using data to personalize the experience, both online
Yeah, absolutely. Both online
and in stores.
and in the stores.
So they know what I've bought before.
Yeah, they know what you like, what styles,
Yeah.
what brands.
They can recommend stuff to me that I actually might want.
Exactly. It's all about making your experience more tailored
Okay, so that's like a
to your tastes.
data-driven personal shopper.
It's like having a personal shopper in your pocket.
That's cool. Okay.
Yeah.
So we talked retail. Now let's get into
All right, let's talk brands.
brand building,
Their own brands, yeah.
because that's the other side of this.
That's the other half of that dual business model.
Right.
Yeah.
Like they own Vince Camuto, Jessica Simpson, Lucky Brand, Keds.
Kids.
We
Okay.
talked about that.
They're also licensing some brands, Hush Puppies.
Hush Puppies. Yeah.
Le Tigre.
So why go through all this effort of building your own brands?
That's a great question.
Well, you could just sell other people's brands, right?
Well, it comes down to control and profits.
Okay.
When you own the brand,
Yeah.
you control everything
Everything.
from the design to the manufacturing
To how much you sell it for?
to the pricing
Okay.
and the overall brand image.
Okay, so it's a way to like stand out.
Exactly. It's differentiation.
Yeah, from the competition.
Yeah, and it gives them potentially higher profit margins.
Because you get to keep more of the money,
Exactly. You're not just taking a cut.
right? You're not just a middleman.
Yeah.
Okay.
But it is a risky move.
It's a big risk, right?
Yeah.
Because building a brand takes a lot of time and money and
Investment, yeah, expertise.
okay.
And they're up against some pretty big names in the footwear market.
Yeah, Nike, Adidas, right?
Nike, Adidas, the big ones.
The big guys.
Gucci, Prada.
Oh yeah, the luxury brands
The
too.
luxury brands, yeah.
Okay, so how do they make their brands stand out?
Well, they're leaning into their expertise
Okay.
that they got from the Camuto acquisition.
Okay, so that in-house.
Yeah, that in-house design and production.
Right, so they're not
They have a great team of designers,
okay.
manufacturing partners,
Yeah,
so they can spot trends.
they can kind of do it all themselves.
Yeah, they can do it all themselves.
Develop new products.
Get them to market quickly.
That's cool.
It's like a mini fashion empire.
Okay, I like that.
Yeah, within the company.
So they can spot a trend and then get it into stores pretty fast
Exactly. And adjust to
if they need to.
customer feedback.
Okay, that makes sense.
Yeah.
So they've got the design, the manufacturing, but how are they actually getting these brands in front of customers?
Well, they're selling them in their own stores, obviously.
Yeah, DSW.
DSW online,
Online, their website, their app,
but they're also
but they're also
wholesaling
wholesaling, so they're selling
other retailers.
to other stores too. Okay,
Yeah, they're trying to maximize their reach.
that makes sense.
Yeah, using different channels.
So if I go to Macy's, I'm like
You're finding a brand.
a designer brand.
Designer brand's brand, yeah.
Okay,
So it's an ambitious strategy,
it is. It's very ambitious.
but it's aligned with their vision
Yeah.
of being this major force in footwear.
But they're also facing those challenges.
Yeah, the same challenges as the rest of the industry.
Yeah, we talked about the softening market,
The softening market,
what people are buying.
the shifting consumer preferences.
Yeah, all that stuff.
Yeah,
That affects them too.
absolutely. It affects everyone.
Okay, so
And then they have some brand-specific challenges as well.
okay, so what are the hurdles they're facing with their own brands?
Well, one of the biggest ones is
Okay.
just getting people to know the brands.
Brand awareness.
Brand awareness. Yeah, they've got Keds.
People know kids.
People know Keds.
Yeah.
And Vince Camuto is pretty established. But a lot of their brands are still pretty unknown.
Yeah, it takes a lot of marketing.
Marketing and
Storytelling.
telling the story of the brand.
Exactly. You have to connect with people emotionally,
And that's hard, right?
especially in footwear. Yeah.
Because you've got These massive brands
Nike, Adidas, yeah.
who are spending so much money
Huge marketing budget.
to get their message out there.
Yeah, it's a noisy space.
Yeah.
They've got to break through the noise.
So they're not just competing for shelf space.
No, they're competing for attention.
They're competing for attention.
Yeah, they've got to get influencers talking about them.
Oh, yeah.
Yeah, they've got to get their shoes on the right people.
Get influencers, the
tastemaker.
tastemakers, yeah.
That's a whole ecosystem.
Yeah, it's a whole other layer.
Yeah.
So it's a high wire act, right?
It's a balancing act, for sure.
So they're doing so many different things.
They are.
So what do you think?
It's ambitious.
What are the biggest risks they're facing? Well, one of the biggest risks is that they're spreading themselves too thin.
All right.
They have a lot of brands.
Right.
Are they giving each brand enough attention?
So it's a classic thing.
Yeah. Do you focus on a few things really well?
Do you go broad
Or do you try to do everything
or do you go deep?
and risk doing nothing well?
Right. Okay.
So that's a risk.
Okay.
But on the opportunity side,
Okay. Opportunity. Yeah.
I think they've got a huge opportunity with their data,
Okay.
that loyalty program data.
28 million people.
Yeah, if they can use that data
To really figure out what people want.
to understand their customers,
Yeah.
they can create much more effective marketing campaigns.
And they can give people recommendations that they actually
Personalized recommendation.
want.
Yeah.
That's the key.
So it's not just about collecting the data.
It's about using it.
It's about knowing what to do with it.
Yeah. That's where they have an edge.
Okay.
Not a lot of other footwear companies have that kind of data.
That makes sense. Yeah, so if they can figure out how to use it,
It's a powerful tool.
it could be a game changer.
Okay, so they're at this pivotal moment, right?
They are.
It's got a lot of potential.
A lot of it.
A lot of good things going for them.
Yeah.
But also some big challenges.
Big challenges.
It's going to be interesting to see what happens.
It's going to be fascinating to see how they handle it all.
Yeah.
And speaking of handling it all,
Yeah.
we need to talk about the people behind designer brands.
The people, yeah, we've talked about their strategy.
It's leaders.
Their challenges.
Yeah. Who's making the decisions?
But who are the people actually making it happen?
Exactly.
Yeah, let's talk about them.
Yeah, we'll dive into that in the next part.
Okay, awesome.
We'll look at the leadership team,
Yeah.
the governance, the culture.
Okay, I'm excited to hear that.
It's fascinating stuff.
All right, so we'll be back in just a moment to finish up our deep dive on Designer Brands, Inc. Stay with us. We're back for the final part of our deep dive into Designer Brands, Inc. And we're going to talk about the people, right?
The people, the heart of the company,
Yeah, because at the end of the day, it's the people
the ones making the decisions.
who make or break a business.
Exactly. Let's meet the folks at Designer Brands.
Okay, let's start at the top, the CEO who's running the show.
That's Doug Howe.
Doug Howe, okay.
He came in April 2023, took over from Roger Rollins,
Okay.
who had been CEO for 7 years.
New leadership, so what's his background?
Well, he's not a shoe guy, per
Yeah.
se,
Not a shoot
but he's got a really deep background in retail.
Okay, retail experience, that's good.
He spent decades at places like Kohl's, QVC.
So he knows how to run a business.
Yeah, leading teams in merchandising, marketing, brand development.
So he understands the whole, like, retail world.
He gets it.
Okay.
And he seems to be very aligned with their existing strategy.
Okay, so more of the same, focusing on...
Yeah, keep building those owned brands,
Okay.
enhancing the customer experience.
Right, making people happy.
Exactly.
But a new CEO always means potential changes.
there's always going to be some shifts.
Anything you've noticed that Howe is emphasizing?
Yeah, he's really big on data and technology.
Okay, that seems to be a theme, right?
It is. He wants to use it to personalize marketing,
Okay.
make things run more smoothly.
He's probably drooling over that loyalty program.
Oh, absolutely. 28 million members. That's a lot of data.
Yeah.
That's a gold mine.
Okay, so he's all about efficiency, using tech to, like, get things done better.
Yeah. And he's already made some moves,
Like what?
cut some costs
Okay.
to free up resources for other things.
Probably for those tech upgrades.
Most likely, yeah.
Okay, smart move.
And he's not alone in this.
No.
Their CFO, Jared Poff,
Okay.
he's been with the company for a while,
Okay, experience.
and he's a key part of the financial strategy.
So they've got a good team at the top.
Solid leadership, yeah.
Yeah, but what about the rest of the team? Anyone else we should know about?
Oh, definitely.
Okay, who?
Debbie Faree.
Debbie Faree.
She's the vice chair and chief merchandising officer.
Another long title.
She's been with them since the 90s.
Since the 90s. Wow.
She's a DSW veteran.
Okay, so she must be good at something.
Oh, she's amazing. She's like a shoe whisperer.
A shoe whisperer.
She just knows what people want.
Oh,
She
yeah.
builds those relationships with the vendors.
So she knows what to buy, when to buy it.
Exactly.
Okay, that's important.
Crucial.
So we've got the CEO with the vision,
Yeah.
the CFO watching the money,
Keeping them on track.
and the merchandising expert, the shoe whisperer.
The dream team.
It sounds like a pretty solid group, but
Right.
we talked about this before, that family business background.
Yeah, the Schottensteins.
Yeah, so they're still involved, right?
Very much so.
Even though Designer Brands is a public company now.
Yeah, they still hold a lot of sway.
Okay, how does that work?
Well, Jay Schottenstein, from the founding family, he's the executive chairman.
Okay, so he's still calling some of the shots.
Yeah, and it's because of this thing called a dual-class share structure.
Dual-class share structure, what's that?
Okay, imagine there are two types of shares.
Okay.
Some are like regular tickets, some are like VIP passes.
Okay, so the VIP shares get more power.
Exactly. The Schottenstein family,
Right.
they hold those VIP shares, so
Right.
they get more voting power,
More say in how the company is run.
even if they don't own most of the stock.
So investors need to know about this, right?
Oh, yeah, it's important information.
Because it could be good or bad,
It's a double-edged sword.
right? Like, it's good because they have that long-term perspective, right?
To build a long-term vision, yeah.
But it could also be less transparent.
There's less accountability,
Okay,
but they do have a board of directors.
okay. So it's not just the family running wild.
No, there are checks and balances,
Okay, good.
and their commitment to ESG is really strong.
What's ESG again?
Environmental, social, governance.
Oh, right, the good stuff.
They got a perfect score on the Human Rights Campaign's Corporate Equality Index.
That's awesome.
So they're very pro-LGBTQ plus inclusivity.
So they're doing the right things?
Yeah, they're also big on community initiatives.
Okay,
They've got this program called DSW Gives.
okay.
They've invested in a Black-owned footwear factory, JEMS by Pencil.
Really? That's cool.
Yeah, to promote diversity in the industry.
So they're walking the walk.
They are.
Okay, that's good to hear.
And they're very transparent about their governance.
Okay, that's important.
They have a code of conduct, both for the company and their vendors.
Uh-huh.
They're very open about how they operate.
That's good, yeah.
So that family influence,
It's still there,
it's definitely there.
but it doesn't seem to be
A bad thing.
hurting them.
It's part of their story.
Wow, this has been a fascinating deep dive.
It's been a journey, hasn't it?
Yeah, we've learned so much about Designer Brands.
From their start as a small family business to their ambitions to be a global footwear giant.
We've talked about their strategy, their challenges, their leadership.
Their commitment to ethical practices.
everything.
They're at this really interesting crossroads.
They are. It's going to be really interesting to see what happens next.
What stands out to you the most?
I think, for me, it's their commitment to those own brands.
Yeah, that's a big bet.
Like, they're really putting a lot of faith in those brands.
They are.
It's a risky move, but it could really pay off.
If they can make those brands household names.
Yeah, that's the key, right?
If they can get people excited about Vince Camuto and Copo Athletic.
Like they are about Nike or Adidas.
Exactly.
That's the challenge.
That's the million-dollar question.
And for you, our listener, as you continue following Designer Brands,
Keep an eye on those brands.
see if they're gaining traction, see if they're driving sales,
Are they resonating with consumers?
because that's going to tell you a lot about their future.
And remember, the retail landscape is always changing.
Yeah, it's a fast-paced world.
They're going to have to adapt and evolve to stay ahead of the game.
Well said. This has been an incredible deep dive, and we hope you've enjoyed learning about Designer Brands, Inc. as much as we have.
It's a fascinating company with a lot of potential.
And we can't wait to see what they do next. Thanks for joining us.